My name is Vlad Colas. I'm an Executive Vice President here at Ardian. I co-head the Secondaries and Primaries team globally, as well as Ardian's business in the Americas. Our strategy in the secondaries market is to provide liquidity to institutional investors at scale on their private equity assets. Institutional investors now often have 20–30% or more of their allocation into private equity, so it can't anymore be an illiquid asset class. We use our data and the scale that we have to provide solutions to those limited partners on their private equity assets. Private equity is by nature a private asset class. The data is not public. We are fortunate that we have a database of over 1,600 funds and 10,000 private companies, and we're constantly mining that data to figure out which fund is attractive to buy, at what point in time, and at what price. Once we have that information, we go to see limited partners and we offer solutions at scale on their private equity portfolios. Scale is more and more important in the secondaries market today. We're at a unique point in time in the secondaries market today. In the last 2–3 years, distributions have slowed down, and that has pushed many LPs to sell for the first time a portion of their portfolio in the secondaries market. This is a game changer for us because in our experience, once somebody has sold once, they become recurring sellers and bring portfolios back into the market every 18 months or 2 years. We raised a $30 billion platform to invest in the secondary market, and we're very grateful to our investors to have capitalized us for this unique opportunity we're seeing. We think it's only the beginning, and the volumes in the secondary market, and thus secondary funds, will keep growing from here going forward. Discounts are a great feature of investing in the secondaries market, but they're by no means the most important thing. The most important is buying the right asset at the right time. And in order to do that, you need the data, you need the GP relationships to be able to move quickly when a seller wants liquidity on their portfolio. The secondaries market is poised to grow meaningfully from here. There are two factors behind that. The first one is the size of the private equity market. Today it's 13 trillion, but by the end of the decade, we expect it'll be 20 trillion or more. The second factor is the percentage of that market that trades on secondaries is also increasing because people realize they now have a tool that's efficient to manage their private equity allocation. So the two combined, we think the market is going to grow very fast, and it'll be more and more important to be a player at scale in that market.